Morning traders, welcome to the Traders Lab. I'm your host, Tom B. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. Thanks for visiting. Could I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab community? Morning, Dan. Morning traders, welcome to the Traders Lab. I'm your host, Tom. I stream live Friday, 11:30 to 1 Eastern Standard Time. Thank you. Well, good morning, everyone. This stream's about integrating Bookmap order flow tools with auction market theory using a volume profile in the intraday developing time frame. This is about the business of trading and helping traders understand how the market works, why it does what it does, and how at times you get in alignment with it. The other part of this is the business side of the trading in the sense of what is this business? How can you potentially create a business, a sustainable business for yourself, and separate the fantasy of what the business of trading is from what it might actually be. And most of us, when we come into this business, we have some fantasy in the sense of how it'll be, how it'll go, and basically what we will do. However, is there really a way, a book, whatever, something that gives you an A to Z process in order to get to your potential objectives, or is it just make it up as you go? And it's really based on a fantasy or a belief of what the business is, but it might be misguided. So the idea of the Trader Lab is to bring traders together. It's a diverse community of like-minded traders. Our senior trader has over 50 years experience. I'm going on 45. And of course, we have the full range from newer developing traders to old salts, if you will. So bringing that community together, creating a place for these traders to come and leverage their collective experience and help us all get better is what the Trader Lab's about. That is what makes that community so special. That's why traders who've come to that community, in spite of their years of hard work and dedication, are now getting different outcomes than they've had previously. And while past performance is not indicative of future results, and everybody's mileage, as they say, or outcomes may vary, I do believe that if you are serious about building out the business of trading, that you can really advance your trader education by visiting the Bookmap Discord Trader Lab community. And there is no cost for this, which is pretty amazing in my mind. And I think it might be in yours. So let's see. Let's get into things here and let's see what's going on here in the market. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this isn't a trade calling room. If we do get to live, we will discuss, as we always do. If you are interested in what you see here in Trader Lab, the link in the bottom of YouTube can take you over to Trader Lab. You do need to confirm your Discord username and email. And then you'll have access not only to the Trader Lab community, there's 60 PDFs of these structured trades that are available to you at no cost to download, as well as access the community and the library of webinars. Some of those webinars go up to almost 5 hours long of real-time narration if you want to see this process over many different market configurations. Thanks again for visiting, guys. If you have questions, please post them in the chat. I'll do my best to get back to you. Also, please give a like or a thumb up in YouTube as you move along here and if you get some benefit from this stream. Okay, RTH open is going to be here. Let me open this up a little bit. A couple things you need to know. ETH low, 62.5. Now, why is this important? This is called the microcomposite volume point of control. Now, let's put the terminology aside. It's not as important as what it means. What the microcomposite volume point of control is a high volume level based on the consolidation that we've been in for the past
maybe 2 weeks. And that is the highest volume. The nature of the market is to check volumes. In other words, shopping. Uh, Trading is not complicated. We make it very complicated. The complexity comes out of the randomness. It is not out of the process. You can learn to trade. What you also, in my opinion, if you do the work, and it is work, and you have to roll your sleeves up and know there's no plug and play, there's no magic indicator. Let's just, those are the beliefs. And the beliefs are generated by the needs. The needs are generated by the psychology, the wiring to avoid risk, to look for the simple solution, to avoid the pain. Fight and flight, primal wiring. The decisions we make are very much also a product of our fundamental wiring as a species. We are not conscious of the things that guide us, but in trading, you will need to learn what guides you, what creates impulse, what makes you bail out of a trade that hasn't failed. Why do you micromanage? What are all these elements that come in? And then your behavior is expressed in the market because you're in a condition of randomness, uncertainty, and risk. If you can begin to put pieces together, and this is what Trader Lab is about, it's much more than the last little indicator or whatever it is you come up with. There's no love potion number 9. Just doesn't exist. So maybe if you get some additional education in the, let's just say, the potential reality of the business, maybe you can go further than other retail traders who are trapped in Trader Groundhog Day, doing things that have random outcomes but have no edge. The business of trading is like casinos. It's just playing games that have a statistical edge. It's really not more complicated than that. And only interacting with the gamblers or the other participants when you have an edge. If it works for the casinos, then maybe it'll work for you. Of course, assuming you do the work to actually find out where is that edge. Well, the structured trades I share in Trader Lab might give you a good template to accomplish that. So it's up to you, of course. And the thing that's problematic, I think, for us, when you're in a random environment, you could throw a dart at the wall. And I have to say this every day when I do the stream, is because we all have winning trades. You could be the most losing trader on the planet with no edge, and you still have winning trades, right? We all have winning trades, but can we consistently extract dollars in a random distribution of trades? And I believe the only way you can get to that is having an edge. Remember, the casinos only play games with an edge. They also pay to gamblers, and they take a viewpoint of it's over a large distribution of interactions, not the last hand or the last trade if it's us. Okay, so key thing I want to point out to you. The ETH low was against a fair price in the intermediate time frame. That might be saying, might's the key word, take some notes, this is too low. Now let's come back to Friday's retail price. It's up here. This was in the RTH, yesterday's RTH, Friday's RTH, the highest retail price. There's yesterday's high, and there's settlement. So the possibility is the following. Come down, test here, check this price. If it's still good, go north. That's one part. The other part is open, go lower, maybe out to here, maybe, value area low, and then come back around and come back here. So we've got what's called two-sided trade today. And this can be problematic for most traders. In fact, any trade, the thing about the condition of the market is it changes. Now, I'm just going to mention early on, for me, it was shorts. Now I'm long, and that's neither here nor there. And I'm going to try to explain what is going on and also how using Bookmap was very helpful this morning in seeing inside participant behavior. Now, there's something else I want to show you, and we'll get rolling. This is the ETH. Now, it also has this morning's added to it, but some of the levels are still relevant. This is a low volume outside edge. It's called the low volume node. And all it does is it separates distributions or consolidations. They're the same thing, distributions of volume from each other. So like up here, you can see there's a high volume here, right there. That's like a retail price. This is an auction. If we fall out, we do it over here. If that's too high, we fall out, we do it here. And then onward and onward. So out here is an outside edge. So I label it. It's called a low volume node. It's a separator between distributions. And that's kind of important. Because if we come back outside and it's too high, notice where the volume dried up. I'm not paying that. We come back to retail. We can come out back here where it's too low. And this is an outside edge. This is also a low volume node. I got to mark that, which I didn't do. So what I'm showing you on the left side is the auction from the ETH. So what we're doing is overlaying. We have Friday's RTH auction. So we have levels in there. Then we have the last auction, the ETH, which shows the highest volume is here. That's what the yellow line is, the overnight volume point of control. And all of this is fractal. They're inside of each other. So this is bracketing outside edges of this consolidation. So when it starts out, when we open up, where am I opening with this thing? Well, I'm opening right in the fair price from the ETH. That's called balance. That suggests to me, and you'll notice how long this is taking. This is before the market opens. All this, if you're in TraderLab, is part of your viewpoint of the market condition currently coming into the open. If the price is here, it suggests two-sided trade. That's the first thing. Then we have to see which side. Now, there's another piece to this, just to add a little more fun, because you didn't think this, you're going to get off easy in trading. You're in uncertainty and randomness. Write that down. Uncertainty being the key piece to this. If we're going to be in two-sided trade, then the possibilities are up to down, down to up, and then one side's going to win. And the other part of this is the market. What did we do on Friday? The market went down, the market went up, closed on the high. That means there's longs in the market. The market goes up to go down, the market goes down to go up. So let's go from there. RTH open. The first target we have that's viable is the ETH mid, and I'll give you some statistics. You have to vet all of these for yourself. Past performance not indicative of future results. We opened lower inside of yesterday's range. The overnight mid has an 83% probability. And again, you have to vet these. The overnight VPOC, 83%, but we're opening there, so let's not be concerned about that. Getting to the previous close, about a 72% probability. Getting to the naked volume point of control, a 70% probability. So we're skewed to the upside. And then we'll see how that goes. So let's go from here. So here's what we get. And by the way, remember, if you have questions, post them. I'll do my best. Okay? Hope you're all doing okay today. Just looking at the current market, it's like sleep. Okay, so market opens, RTH open, overnight volume point of control, too low, going for the overnight mid, and looking to see who takes control. So now for me, since I'm opening in the middle, I get very patient, because I'm anticipating two-sided trade, and we could go either way. We could come out down here. We can come out the top, as Dirty Harry used to say, do you feel lucky? So I see sellers here. I see sellers here. I have what's called VPOC migration. This is suggesting the market might be going higher, but since I have resistance here and I have support here, I'm waiting to see which side. And I'm a bit, going, huh, you ever do that? Huh? Well, that's what I'm doing. I'm going, because I know it can go either way, of course, and I'm anticipating two sides, but the issue becomes who's going to take control. So let's see if we can figure this out. This is called developing volume point of control. And what it is showing, and it starts at 0 at the RTH open, okay? And as it develops, as the volume comes in, it's going to move in the direction of the volume. And since it starts out with no volume, it's very sensitive. So let's take a look here. We're coming up, and right here I'm going, wow, looks like it's going higher. But I have this, and I have this. This is resistance, this is a target. So I'm concerned. I'm looking at this and I'm thinking, wow, I think long side, but I can't take any initiative behavior here. So I have to let it and see what happens. So right here, if you look at this, I see a seller here. This is absorption. Selling icebergs are here. So this is the first thing I see is I have delta, which are aggressive buyers. I have a passive seller there. And so it's these icebergs. Okay, so I'm seeing the icebergs, and this is even just before the RTH open. So, 600, 750. There's about 1,000 I sell icebergs here on the limit side. So I'm observing that. So I'm now starting to put some pieces together. And order flow is helping me see this because I wouldn't know if I'm sitting with a candle or, something else. I really wouldn't be able to tell what's going on here. Now, even with order flow, I can see what's going on, but is there going to be a buyer here to take it higher, or do I run out of buyers? Here's my buyer. My sellers are there. And here's something else in order flow. If you see high, and there's nothing up here, there's just some stops going off. And this is, by the way, stop divergence. It's just a term. You know what divergence is. What it means is equal or higher, and you get less of something. The buyers are the stops and probably some initiators, okay? But if I run out of stops and there aren't new buyers, then I can rotate. And that's exactly what I see right here. I'm going to put a little line on here for us just so we don't forget where this is. So let's watch. Market breaks away. Now, this is what I know, only in hindsight. As soon as I'm below this, and actually this is a potential short here. Now, I took a short. I'm very aggressive on the open. I don't recommend anybody does that. It's just kind of what my thing is. And the other part of it is, remember, the market goes up to go down. So I'm going, well, if this is too high and this is too high, and remember what this is. This is high volume. What is high volume? You're in the supermarket. Hold on here. Got a little funky thing going on here. You're shopping. And if the price in any microstructure or fractal, and think Russian dolls. Russian dolls, it's the big one down to the little one. This is a little one. And they all work generically. Inside of consolidations, no matter how big they are, there's high volume. And think of it like shopping. So when you see this, just this, we're just talking about this. That high volume, which is right there, is an auction. So it's like, I'm not paying that. Yeah, but it's on sale. And the volume is right here. If I leave it, it is saying it's too high. So now I've rejected it. It's like a micro breakout. The other part is going up in time frame. This was the highest volume in the developing daily time frame, and it's right there. So these are fractals. So microstructure and then developing full RTH structure. So this is going to shift around, and all these little micro high volumes, we're going to be tracking them. So this is too high. I take a short. Not saying it's a good idea. I'm just saying this is what I did. And so I get scaled, and now I'm holding. My resistance is here. So let's watch the behavior. Why is this doing this? You never know. So scaled short. Now, 1 second, guys. So this is too hot. Now this moves down. VPOC migration. This becomes resistance. Let's watch. And the reason for this is, so too high, break. This shifts down. Too high, break away. Pullback, mid and VWAP, break away. VPOC migration. Let's follow the yellow brick road. This is what I call it because it's yellow. Made this up a long time ago. This terminology, I made it all up because it didn't exist. So variable high volume node. This is that's the same as this. And what it's suggesting is volume is moving lower. Now, why is this important? Volume is the price where buyers and sellers agree to do business. And where the high volume is, if it's too high, the market moves away, or too low. Here, it's too high. The volume and the transactions are moving away. I come back here, well, mid VWAP. If we're not going up, we're going down. Okay, now what? This is the retail price. Now, here's the other side of this. If the retail price becomes too low, we can cross back above it and test this and test this. So that, and this is all Trader Lab process, if you will. Now I'm going to mark this down here also. This is and the reason something is a little out of whack here today. I'm going to have to check this out. Sorry about that. This is a high volume structure right here. Chop, chop, chop. Same as that. Chop, chop, chop. Except we're on the other side. Break high. That's a trigger. It comes back to the high volume. These are potential longs, or cover your shorts, or do nothing. But this is showing you the rotation. And notice the behavior. You'll see it on the way back up. For example, you could see it here. There's the rotation. Here's the volume here. Here's the rotation. Here's the microstructure here. Break up, break out. What does that say? These sellers are under the bus. They were absorbed. Here's the buyers. Here's the buyers above the seller. Break. Sellers try again. The buyers are in control here. These sellers were absorbed. These sellers are absorbed. Back here, watch. These sellers were absorbed, sellers absorbed. Right here, you cross above. Where are we going? Here and here. Now this, what I'm going to start showing you now is very interesting. And we were discussing this in Trader Lab. This setup is short. Now I'm going to show it to you. So I'm sitting short. I cover, just letting you know. And now I'm going, what's going on? So I'm kind of waiting now because I know where's my resistance. It's here and here. Okay. So I'm thinking two-sided trade, right? Now it doesn't matter what I think because I take stops and I get twisted in the wind like everybody does. It's not, there's no holy grail. There's no perfection. There's no prediction. It's just maybe. So I come up here, I see these icebergs selling, I see the buyers having a wonderful time, and let's go back to the left. This is too high. Well, I come back here. Now what's over here? This is the opening swing high. What's at the opening swing high? Stops, right? So when I come up here, don't forget my longs are down here, and I didn't take a long. I'm still thinking short. And I'm still going to always ask myself, why are you thinking short? Well, because this is too high. Where are the stops? Right here. If I get into the stops, 269, thanks for playing. Broker sent you a gift basket. And I see absorption, and I see my icebergs, and I see my alignment. And I see my ETH mid, and I'm in the area, I don't have to tag it, has an 83% probability. Am I shocked? No. This is my outside edge. So right here, I see the break. I'm looking for a short. So let's watch it. I come up. What else do I see? More icebergs right here. So the icebergs are here. I see 600 icebergs here, 200 up there, 400 here. They're selling the you know what out of this. So I had my sellers here. I come up. So, and I get VPOC migration. So I am conflicted. Let's just watch the behavior. And I'm going, because I'm in balance. It can go either way. I understand that. So all I can do is try to stay in alignment. And I do think statistically we have the potential to go to the upside. But the participants are telling me sell it. So that's kind of what I'm doing. So I come up, I see a lot of icebergs selling right here. So I've got location. Location is like real estate. And then break. So now this now is VPOC. So the VPOC is marching higher. Now, if this becomes too high again, I can come back and rotate down. So I get short again. This is too high. This is a test over here. Breakdown. This now is support right here. Yellow line. In other words, this was too low, so it becomes support. This is now retail because this shifts up. If we're going higher, we're going to do one of these. When we come across it, it suggests we're going to come back. So when we break down, this becomes resistance here. And this is where your stop would go. So for me, it's a short. And where am I going? You're going to ask. Right here. For a scale, right back to that support, and then holding. Where do we come up here? Back to 84.50. It's an add, or you just have your stop out there. VPOC migration. So too high, too high, too high, test, too high, break below. Terrible to trade. I mean, it is. Down here, absorption here, and a sweep. Back to there, and this is what I was doing. Bang, bang, bang. Now, we're also discussing in the Trader Lab about this icebergs up here, 85 here. So we're coming back, and what we're doing is we're in two-sided trade. So I'm just trading outside in here, called mean reversion. Now, here, we take out the first hour's half hour's high, 9 a.m. So 9:05. So what this sets up, and I have this location out here, which is what this is based on. This was another short for me. This is not necessarily Trader Lab-ish, but I'm using the profile and the statistics. So I come out here. I had my iceberg selling. I break. I see my seller. This is absorbed. This is another short. And then you're coming back here. So I'm just trading outside in here, and I'm going, But statistically, we do lean north by the statistics. But I find that you just have to stay in alignment with the market as best you can, especially on a day that's two-sided like this. This is hard for me because it's a very conflicted trade. One moment here. One moment. Sorry, guys, I gotta take care of something over here. Okay. So you can see here, I'm going to just show you something in a microstructure here, just so you could kind of see how I'm looking at this. So here's the chop, chop, chop again, right? And if I put a rectangle around this, just to show you the consolidation, I'll just make it a little bit clearer so you can see structure. So if we look at structure, what you see here is sellers are up here, passive. Down here, we have passive buyers. The buyers are here, sellers are there. The sellers are here, buyers are there. So chop, chop, chop. High volume is here. We break out. Now, you have choices. You can try to sell it here. You can wait for it to come up here, or neither. Whatever floats your boat. There's a short in the Trader Lab. You're going for this. I took this one, and the idea is to come. So this is how this works. A short here, and it's in alignment. Now, there's no precision. And the other part of this is the order flow. And that's really what's giving me this location. I see the icebergs. I see the absorption here. Now, I don't see absorption till after the fact. I just see the buyers. When I see the change in behavior, then I can go, well, why didn't this go up? It was absorbed. Sellers, pull back to where? Right to there. And then I'm looking for mid and VWAP because I anticipate retail buyers here. If we come below, then I'm coming here. Variable high volume node. It's right there. That's by scale or whatever, or your scale could be here, doesn't matter, or here, and then you're looking for it to come out the bottom. So let's see what it does. Next target is here. And then looking for it to come out the bottom. And as they say, not so much. Now, 85 was really important with these icebergs. Here, look at this guy. So you got 85 where all this selling is taking place. And we were discussing this in Trader Lab. So this is your resistance right in here. Now, here we get the 3,000 icebergs, a sweep. And now this becomes a potential over-under. Now, my last trade was I took a long. And that trade just got stopped out a little while ago. So we come over 85. I pull back here. I took a long. Well, wait, not there. Let me just see. Where was it? Here. Sorry. Here. So we took this out. I got long here. I took right here is my resistance, right? I took a scale ahead of this. It was very tight, and I took a stop. I got out. Took a small, a couple tick loss on it, really. And that's it. That's how I'm using the structure. And it's all auction based. Are you guys with it? Now, I haven't been looking at this, my last trade was on the long. So now, nada. How are you guys doing? How are you guys doing? Please give a thumb up in YouTube if you're getting something out of this. It always helps us stream. Also, subscribe to the Bookmap Discord server. There's no cost for that. You can click the link in the bottom of YouTube. There's 60 PDFs of these structured trades you can download to reverse engineer, make them your own. Also, a library of webinars in the Trader Lab community. It's all available at no cost. The Trader Lab is about building out the business of trading, understanding it is a business. And if you can approach it like a business, you might have an opportunity to develop a business. It's not a video game. And what really is difficult in trading, I think, is once you sort it out, you understand how it works. All this takes a lot of time to actually develop an understanding. I don't use any indicators, so I've gone to the max of staying in real time using order flow. The profile is a chassis, and then overlaying structured trades inside of this behavior. So once you can define it, what it means, and this is really a translation. So I think of this as language. So speaking the language of the market is based on participant interaction. Notice support is right here. It is not based on indicators that are backwards looking. Indicators have a place. But if you can understand market mechanics, how it works, why it does what it does, think what you might do with an indicator when you know when to apply it and when not to. We all start out with indicators. That's okay. It's what are you going to keep waking up doing the same thing that doesn't have an edge if it doesn't for you? And a winning trade is not an edge. An edge is specific behaviors over a large sample size that have a positive expectancy. It's not going back to the last big swing and overlaying your indicators on them so you get it next time. That's just curve fitting, and that is not sustainable from my experience. So this is support. That's why you see the reaction here. Now we have to see what's going on. Resistance, support. We take it out. This is an outside edge here. And this is the first hour's low. There's a possibility today that we have what's called a neutral day. And if we take out the first hour's low, the IB low, there's about a 30% possibility or probability that we take out the first hour's high. So if we come under here, we're going to take the longs out that are under here. We can still get down here. My shorts initially, I was heading for this for my targeting value area low, which has about a 71% probability. So that's the basis of the shorts. The fact that we're two-sided just kind of sets this up for, sloshing. If we come out down here and we come back in, I potentially will be taking a long back to here. If I can come out the top side up here, I'm then going for this and maybe this, so we'll see. It's really kind of up in the air, as they say. You have ETH low. The thing about the low side maybe not being where we're going to go, we may come out here, is the fact that the ETH low tested a higher time frame, high volume level. It doesn't mean we won't. Anything is possible. We can come down here. We can come to yesterday's low. All that is possible. Or we just take the longs out and then come back inside and take the shorts out. So when you're trading, it's not about predicting. It's about alignment. But I know in my plan what possibilities are. I don't know what it will do. So we're not too concerned about predicting anything because we can't. We're a little more concerned about alignment and then using structured trades that have a statistical edge that we have done the work on to know where that shows up and what the conditions are. It's a conditional process. If this, then that. If this is too high, then what? If this is too high, then what? Then back here, maybe. If this is too high, then break low, potentially come under here or test this. If we come back in, then what? Then back here. So we'll get to see what happens. And it's not a prediction. It is if we know the possibilities. That's all you got. If you know the possibilities, then your job is to anticipate where behavior might take place. And then if you get a triggering structure and your qualifications for a structured trades that has a statistical edge are met, then your job is to put the trade on and accept the random outcome. Hard for us to do, isn't it? So now we're taking out the first hour's low. So we have IB extension. 71% probability we come down here. And then if we come back inside, the trade would be a long back here. Not a recommendation, guys. We all take stops. You don't need to take my stops. Remember, 71% probability here. We come back inside and we have to be pretty darn careful. We are looking for long. We'll see. Absorption down here. Sell stops are out under the low of the day. This here is a high volume structure developing. This is a potential long structure setting up. Your stop would be under here. It's not a recommendation. You're looking for this. Let's see what it does. Absorption here. Sweep down here. Absorption. Micro high volume structure. This is the current volume structure here. Going to throw a little line. We have to clear this here. Got to clear it. And then we're looking at this. Okay, let's see if it does it. It's called mean reversion. Support is here, and we can still come down out here. So this is a bit rough because of the range. It has to fit your risk reward. So let's think about it. We can definitely take this out. There's a 71% probability here, right? And if we take it out, what do? We take a stop and we go on to the next trade. And these are not trade recommendations. This is structured trading. Now, resistance is going to be here. We can anticipate potential sellers at the mid and VWAP. And if we can clear the mid and the VWAP, this is next on the hip parade. If we can come around to the other side of this, this is a structured trade. We're looking at it to come out the top, if it does, and this. So that's the trade. This is a Trader Lab structured trade. Now, what it does, you know, this is no different than putting a coin in the slot in the casino and seeing what it lands on, you know? And that's what trading is, gaming. The idea is, can we extract an edge? And over time, not this last trade, which is always random. Write that down. The outcome is always random. Can we get back inside? If we can't get inside, we can continue south. So that's what I know. So for me, I'm betting, and that's exactly what I'm doing, that I can come back inside. Now, there's two possible trades here. There's come back here and get short for continuation down, looking at the 71%, or coming back inside and squeezing the shorts out and coming back in. So that's our trade. We'll see what it does. And there's no right or wrong, guys. You know, I know our self-talk, you know, it's about right or wrong. I need to be right, right? I don't want to be wrong. Well, we're not going to get approval from the market. The approval, I believe, comes from having a vetted trade plan. And then did you follow it? Not the outcome of one random trade. We have absorption here. Let's see what happens here. So you see the selling icebergs, 514 buy stops. Thanks for playing. Brokers comes to your house and hugs you. Then the sellers were here. The sellers were there. Buyers absorbed. There's the iceberg. Here's your high volume. Remember? The sellers are here. My buyers are down here. So that's support. Once I come back across, these guys were absorbed. That's why the long, so you know, is because of this structure. The scale could be here. Could be anywhere you want it to be. Or here. Here, remember why. Here, and where are stops? Mid, VWAP. Where will we get retail sellers? Mid, VWAP. Where do we want to scale? Ahead of the mid, at least. And then potentially get a counter rotation because we get mechanical sellers. And of course, we got to get past this to get there. Let's watch. You guys have questions while we're waiting on this. So we're waiting on this. We're looking potentially, we got to clear this, then there, and they're just steps following the yellow brick road, trying to get here. This is called mean reversion. If we get here and we can come across, then we're looking to take out the shorts and then extend to our targets here. Are you guys tracking? Do you have questions? Please give a thumb up if you're visiting in YouTube. It's called a like. Hope you like it. Are you guys following? How are we doing in YouTube? Yeah, the thumb up is down in the bottom, guys. That's the one where the algorithm in YouTube actually goes, oh, they like it. Help support us. Thanks. You like it? No. Well, thank you. I don't know if you're referring to me, BMX, but thank you. I'll assume you are. Uh, by the way, these streams are available exclusively to Bookmap Discord Trader Lab participants. There's no cost to become part of the Trader Lab community. It is a serious community. Trading is not a video game. We do have some fun, but this is very serious. There's a lot going on, actually. I don't know if I can show you Trader Lab without disconnecting everybody in the Discord chat. I'll have to find out if I can actually show the Trader Lab chat while I'm streaming. So I'll have to find that out. But I'd like to show you all the charts that are posted, the interaction, the conversation, if you will, and occasionally a little humor floats across. But it's very serious. If you're interested in the business of trading, I would encourage you to come visit Trader Lab. And it's not about one way to trade. Everybody, we get very, I think, dogmatic in the sense of our beliefs. And I think you have to have a firm belief to be able to manage your fear, right, in a random environment. It's not about right or wrong. It's not my way to trade, your way to trade. None of it matters. What matters is, can you replicate what somebody else does and other traders? And there's a lot of traders in Trader Lab, are doing things other than what I do. But they integrate pieces to kind of make a cohesive process. Early on, I started in 1980. So along the way, technical indicators were just new. I certainly got into them. I shared an office with George Lane. He created stochastics. That was the holy grail, because I had not, oscillators were a new concept. And basically stochastics is a derivative of moving averages. It really is. So when you start thinking about oscillators, you need to kind of think of what they come from. If you're going to use an indicator, you need to know what it actually is, not just the line crosses, because that's just what retail traders do. And as we know, retail traders have a horrendous success rate. There's a reason for that. So you can take what you've learned, your education so far, and instead of trying to fix what doesn't work, maybe there's a reason that you keep coming back to try to fix it. And even though it has random wins, if you just closed your eyes and pushed buy or sell with nothing, no charts, you'd still have random wins. That ought to tell you something. There's randomness in this and uncertainty every moment, because anything can come and disrupt your intention. As icebergs, other traders, news, somebody trips over the cord at the CME, pick one. By the way, that has happened. By the way, I know about the cord, but where the CME goes down. Whatever can happen will happen. We have sellers here. Here's your icebergs again, absorbing the buyers. So we're seeing a lot of selling, but in spite of the selling, because that 85 was like 3,000 icebergs, and the market kept coming back and banging into it. And sure, we would counter rotate, but we've been pressing to the upside. So even though the market is always rotational, because there's a harmonic involved here, that, in other words, just part of the noise of the market is to rotate. So subject to how you perceive the market, you can be using this process in a very short time frame or trying to get a broader stroke. I used to be much more short-term focused, but what I found, at least only for me, is I used my skills that I developed in scalping. I was a high-volume scalper. So I can use those skills to recognize microstructures, which is kind of what a scalping thing is, and use it for triggers. So I'm using elements, because you've got to be proficient at all elements to operate in all fractals or time frames, if you will. But what I attempt to use microstructures for triggers, and then try to get positioned for larger swings. Now, that's just me. Because for me, if I can come out the top and get up here from a long down over here, that pays. You know, I mean, that puts bread on the table, as they say. That would be over a 20-point trade. So how many of those do you need? So for me, it's get risk neutral. The market has to come back to take me out to an extreme. And yes, I do get taken out. I also trade, and I only talk about a minimum 2-lot configuration. I trade a little differently than that. But let's just say in TraderLab, why 2 lots? Why not 1 lot? Because if you think about it, when you're in a state of fear, which we all are, let's just get real. And we're in a state of fear because of emotional triggers. You may say, hey, I'm tough, I'm this, I'm that. Yeah, but what's under the hood, under your conscious intentionality, is a reptilian brain that is wired to protect you. It cannot differentiate between a bus, a saber-toothed tiger, or a protective stop. It is wired. So you can have intentionality about what you're going to do. But in the moment, that intentionality, that conscious part of your mind, there's another piece in here that will take over. And that I call that Hyde, Jekyll and Hyde. Hides that other element. And I can tell you, your intention does not control Hyde very well. I mean, it's almost like something else is grabbing the hand to grab the mouse. So in a 2-lot configuration, the reason for this is if you can get risk neutral, you can leave your stop at failure, not get where you're starting to micromanage or you get a counter rotation and you bail out here. Has this trade failed? Well, no, it hasn't. Am I willing to give back MFE? And maybe I move my stop. You know, I have criteria, but let's assume you have no risk. Does that give you a better opportunity to stay in this trade for this, which, by the way, because I know you write these things down, has a 70% probability? What do you think? So if I am risk neutral, my stop can be way out here. And sure, I'll give back a lot of MFE, but look what I'm working for. Over a 20-point trade on it, actually 20 points in a scale, it would be about a 24-point trade on a 2-lot. And if you can't handle that, you put on 10 micros. It would still be a great trade if it works. Now, if it doesn't work, you're still going to buy a burgers and a Coke. Is everybody tracking? Does this make sense? How are we doing in YouTube? That's right, Tiger Williams. The idea in TraderLab is to help traders understand how to build a business. And the business for me, and everybody's different, there's traders that are going to try to micro trade, they're going to get, I don't know, put an envelope, a moving average envelope or anchored VWAP and try to trade these little standard deviations or Keltner channels. All this stuff's been done for a million years. There's really nothing new in trading, in my opinion. There's always something new, yet it's always the derivative of the same. Because in the end, it's the participant interaction that creates all of this. How you measure it, it all comes down to the same thing. The reason I use the profile and structure is I am working with the actual interaction of the buyers and the sellers and the order flow of their behavior. I don't need something to tell me the market turned up over here. Where do I want to get long? I want to get long here. I don't want to get long here where an indicator crosses. I mean, I don't know, Do I see this, do I want to get short because my short-term indicator would cross over? Well, no, I wouldn't. And it might go down from here. One has nothing to do with the other. But what I do is I try to look at this in a holistic fashion in the sense of what is going on. And the other piece is and I always like to mention this, and this is very basic. Trading doesn't, I always say trading doesn't have to be simple. Uh, I should say it doesn't have to be complicated. It's actually simple. What's hard about it is randomness. So make a note. Trading is shopping and it's simple. If you make it we believe in complexity because we're trying to solve for randomness and uncertainty. They're not the same. Randomness is not complicated. It is random. So we know what it is, right? But understanding how the market works is really where you can iron out the randomness and overlay something that can be defined or conditional, then to attempt to organize behavior based on your understanding of how the market works. That's what we do in TraderLab. It's not a one size fits all. And most of us retail traders, we try to isolate a behavior, whatever it is, and then look for it to continually replicate itself every day in the market. So you might build out something that works in a trending market, because that's where we see the big dollars, the big rotations. But we have a different plan in TraderLab for that. For this kind of market, we have a different plan for this. It's called mean reversion, which is an outside-in trade. Outside in. It's not inside out. In a directional market, we can be trading continuation trades. We don't have that here. So when you bring a generic plan, thinking the market is the same every day, how can it be? How can the market be the same all day? It isn't. This market can be rotational and then change into directional. If we come out above here, then we get range extension and we can have, a normal variation day, which is not important, but we can get here. If we can't, we can still fall out the bottom and go here. Do you know which one? If you do, come to TraderLab and DM me. Let me know. And let me know how you know. Because in reality, there is no way to know, because that's predicting. And there's traders that are always going to predict, and they get it right. Sometimes they get it wrong. When I started trading, I went to the CME. I took a course on, it was called Classical Bar Chart, and we didn't have candles yet. It was in 1980. And I learned measured moves, the standard stuff, head and shoulders, pennants, all that. Wonderful. And I thought, okay, this is what trading is, because I didn't know anything. So I came in with the belief that it was about predicting where the market was going to go, because that's what you do, like with the head and shoulders or any of this other stuff. It's measured moves. So for a number of years, I was about predicting. And then I developed further understanding. I went into, quote, trading systems, which is predicting in its own way, and it's optimizations to create edge. So it was still a prediction business and continually tweaking and tuning. So I created a term for it called Trader Groundhog Day. I kept waking up in the same place, fixing it, Well, that's what retail traders are doing. They're waking up doing the same thing that doesn't work. But because it works randomly, they think it's just making it better. That's what I believed. So I'm sharing my experience, and it's almost 45 years. And it's not that I have an answer for you. I do not. What I have is you can leverage my experience and maybe not spend a lot of time that is not productive. Maybe you can also get a better understanding of what are the pieces you need to get under control in order to be in business and how to sustain a business. That's what TraderLab's about. And then you do your thing, There's no right or wrong. Sometimes traders say, I've been doing it all wrong. And I say, well, what's wrong? Well, they don't measure it, so they don't know if they have an edge. I can assure you the casinos don't play games that don't have an edge. And they don't make them up. If they lose dollars to the gamblers, they don't change the games. We are always changing the games. We are always acting emotionally. We are changing. We're just doing it on the fly. Casinos don't operate look that way, but they have a very successful business model. Well, maybe instead of us making up something out of left field, why don't we just replicate use the gaming business, the casino operation, as a platform or a template to overlay our business on, because there's more similarities than differences. The only thing is we don't have the cocktails and the ticket to the buffet. Are you guys tracking? So we want to see how this behaves. It's two-sided trade. Remember where our support is. We can still come down here. We did range extension down here. We've come inside. It still sets up the possibility to come back here. Remember, mid VWAP here and potentially out the top. That's this current trade. Support is here. We can test under here. If we still find our buyers here, we can go right back up here. So we'll see what it does. And again, if you don't mind, please give a thumb up, a like in YouTube. Also, there's a link down there in the bottom of YouTube. If you want to visit the Bookmap Discord Trader Lab community, there's no cost for that. Also, there's a link down there in YouTube. If you'd like to get your hands on Bookmap, there's a free digital version of Bookmap. I don't know if you know that, and it comes with data. You can enjoy that. And also, there's other education in the Bookmap server. Stocks, options, crypto, order flow with a high tier tool like Bookmap. Notice the sellers were absorbed here. So we want to see the behavior down here. This is where the absorption was. This is where the sellers were absorbed, and the sellers were absorbed here. Absorption is here, so this is our support. Now, here's something else you need to know. The market can come down here and get these buyers activated again that were down here. So support ultimately is right under here. So as long as we stay above here and above the absorption here, all this in the sweep, then this is still support. So our support's out here. This trade would fail under here. And actually really under here, but out here is good enough. Let's see what it does. Back to the IB, absorption. This is another long in the Trader Lab, right here. And it's still looking for scale at mid, VWAP in here. So we have two longs. You had this one going here. This is another long. It's called the IBF, IB failure. I made these names up. I didn't know what to call it. And it's a mean reversion trade. It's from here to there. Same trade. So we have two longs here. We have this one, and these are not trade recommendations. I'm clueless. Clueless doesn't mean ignorant. Clueless means I have no firm attachment to the outcome because I have no control over it. Clueless means my mind is completely open to what is presented by the participants. And if things change, I will change. I will get long, I will get short, I will do whatever I can do to get in alignment when I have a structured trade to operate it. So what I know is that's a long and this is a long. And then this is my resistance still. Notice there to there, and I'm looking for this. So we'll see what it does. You guys can write this down, by the way, if this doesn't fall out. Now, if it falls out, then the trade is done, you know. That if we come back across, here would be the next one, 30% probability, not high, right? And then this, statistically. I don't know about yesterday's high, not on my list, but this is possible. And of course, this is possible. So it's not predictive. Remember, it's maybe. So maybe if we don't come back under this, we come here. If we fall under here again and get selling, maybe we come down here and who knows, right? That's what you got. So until it resolves itself, for me, the trades are outside in or outside in, mean reversion. until we leave the mean. And it will leave one side because we are in something called balance. Your buyers are out here, your sellers are up here, and it's just this. And one side's going to get pushed out. That's what I know. That's all I know. And I have to tell you, in trading, I don't need to know anything else because I can't. So instead of trying to predict, which I can't, I try to align. I hope that makes sense. Notice where the buyers were here. The buyers are here, the buyers are here, the buyers are here, the buyers are here. IB low is here. For the IB failure, which is a counter mean reversion trade, which is to here. See if it works. This is Trader Lab. And again, I don't know. Does anybody tell you what they know? The one thing I know in trading, and it's the absolute thing I know for sure, is that I don't know, and that the outcome of any interaction with the participants is random. That is exactly what I know. The rest, I don't know. And as they say, that's a straight oil from the can. Hope you're getting something out of this. Don't forget to give a like if you're in YouTube. This is Trader Lab. I think, Furs, are you trading from a plane? Did I catch that right? Are you trading on flight Wi-Fi? I think in the Bookmap Discord Trader Lab community, we have a trader who's flying to LA. I think it's him, and he's trading. I hope you have business class because those seats are so small, you might not be able to get your laptop open without getting kneecapped. I don't know if he can hear me. Probably not. Now that's dedication. Yeah. Okay. So guys, we're sitting in along and working on my crochet. Now it's just patience. And remember where we're trying to go. Here and out the top. And why, you ask? Because in the auction, this is a higher time frame volume point of control. And we tested it. Now, it might mean, and this is, remember, the word might is another term for maybe. Maybe this is too low. This is like you going to the store and checking a retail price and it's sold out. We came down in the ETH. Let's buy some S&Ps here. Well, sorry, we're sold out. So possibly, and that's all you got, possibly we're going to come back to this side and check the highest retail price from Friday's RTH. That's the logic. Doesn't mean anything more than that. And remember, it's maybe. So that's it. Resistance, long location, resistance, and you're trying to go here, or you're long from this where I discussed it initially with you guys. This is your long, your stops under here. You'd be scaled and you'd just be hanging out. Questions? Hope you're getting something out of this guy. Marcel's asking me if I use any add-ons. Yeah, I do. There's a lot of add-ons available in Global Plus. Some you can add, some are part of it. Sweeps, stop at iceberg detector, absorption, price levels are basically open, high, low, close. There's a lot more here I don't use. And it's on so things don't get nasty and crowded for you. Market pulse, which is this. Audible indications. It's good to hear what's going on. Anchored VWAP. Trader Map Lite, which removes this algo. And there's a bunch more in here, I think. Yeah, that's about it. And there's much, much more. But then the chart would get a little noisy for the stream. So this is what I can trade with, you know. But I consider these really important. Stops and icebergs for me are important. I want to see who's active. So, you know, when I see like the delta, I can figure out after the fact that there was absorption here when I break away from it. But when it's happening, I wouldn't see it. So with the stop and iceberg detector, I'm seeing the icebergs, I'm seeing the stops, and that gives me additional insight. Absorption, it's always good to see, because if I see absorption, so if I see the green delta and I see, here's an idea, here's something. I see us come down, I see the icebergs, you could kind of see how you use it or how I use it. And I think, and you can learn a lot about this. There's streams specifically on how to use order flow. This is a stop sweep and this is absorption. And there's my limit orders. Now the 689 stops coming out are also market orders. I should say market orders, the delta. So when I see the buying absorption, it's the buy icebergs and whomever accumulating these sell stops. When they take the other side, and there's always somebody on the other side of our trades, I now see sellers here and a seller there. I also see the absorption. So that's showing me that buyers are here, buyers are here. When I come back and test this, the sellers are here. Why did we reverse off, you ask? Because these buyers were still here. So when you're running your stops, if you tuck it up right here, you're just waiting to get taken out, like those 13 stops that got taken out there. In my opinion, if the buyers think this is a good price there, if we come back outside, those buyers can still be activated. And then we can, you know, come up. Sellers are here, sellers are here. So now I know we had sellers, sellers, sellers. So now let's watch. Buyers are here. Sellers are here. Where's our longs? Under here. So now we got to see, do the buyers come back? And where were they? Here. Selling icebergs are here. Now we want to see if our buyers come back in down here. This is a Trader Lab structured long. There was absorption here. We want to see if our buyers still get motivated. Or if not, then the long trade is going to fail. And that would be that. Any questions? Kiloton's asked me if you could, I go to the add-ons. I don't remember the configuration for the absorption. I think you need, I don't know if you need Global Plus for it, but you definitely want to check that out. If you want to add it and see which version. There's Global Plus, you know, and they have different, you can trade off of Global Plus, which I think is great. So you can actually execute right here if you want. So this is the area we got to be watching for, or else the long trades are going to fail. So let's see what it does here. Buyers were here. This is resistance. Didn't get over it. That presents a problem. Now the buyers are down here. And the buyers were here. So we have to see now what we do right in here. Yeah, first it was. This absorption here would be a long, and it looks like it's going to fail. So, yes, I'm getting a question, is this long for the IBF, which is a long trade? The answer is yes. And this was a long also here, which is the one I narrated. This would also be a long, but this one looks like it's not going to make it. This one would be scaled. And if we failed down here, this one would scratch. This one would take a stop if we can't get above this. So this is our support. So right here, it's time to make a decision. And it looks like we're going to take out the low. We'll see. You know, it hasn't yet, but it's leaning there because we're getting below the buyers here. So this is where the buyers were active last, which was down here. And we're below it. So if we don't get our buyers right now, then we're just going to take the low of the day out, probably. So we're just going to watch it. There's nothing else to do. The thing to know about the IBL, this long, your stop should be on the outside edge. If you run it right under here or right under here, well, you get stopped out for sure. But even, so what I was saying earlier was the buyers are here. If we come down, they can still show up. They are also here. They could still show up here. They didn't. They showed up at the next location. And it's still random, you know? So I like to keep my stops outside. So I really need to get risk neutral. So my stop could be here. If I took this long here, I would take a full stop because I might use this. But I'd be putting the trade back on again. You know, because I'm going to be looking over here and saying, well, this was the best place to get it, you know. The other part of it, so you have here, you have here, you have here, and then you need to get over this and over this. So that's the trade, you know. Now, the idea of the trade is we take stops, but has the structure failed? It hasn't. The rotations are random, and it could do anything, right? Nothing has changed. It could still take the low of the day out. It can still take the high out. And this trade is to take the high out, and it could still take the low out. And if you're going, well, that's pretty ambiguous, I'm going to say, yeah, it is, because that's trading. I mean, there's no silver bullet or magic 8-ball. At least that works. We had a magic 8-ball on the trade desk, but it didn't do so good. It would always say, you know, you'd say, well, should I get long or short? And it would say, ask again. I mean, really, it did. The only problem we had with the magic 8-ball is worried that somebody would grab it and throw it at somebody because there was a lot of testosterone floating around. You know what I mean? Yeah, guys, you know what? Remember, if you're interested in Bookmap, grab the Discord link in the bottom of YouTube. There is no cost to come to the Bookmap Discord Trader Lab community. You'll see Bookmap in all of its iterations there and how it's used. And also, if you will grab the link below, also in YouTube, you can access the subscription page and there's a free digital version. So you can see what all the different versions are. Global Plus is really, I mean, I trade off of this on my trading workstation. You know, you can trade right off the chart, you know, like this. I'll just show you, you know. So, you know, and then you could just, you know, move your trades around, whatever you want to do. This should be under here. This is not a trade, by the way. I'm just showing you this thing. So, and then you can do whatever you want to do. So you can grab these, you can move them around, you could do whatever you want to do with them. So let's see what this does over here. It's not looking very good for the long side, but until it fails, there's really not much you can do because we're still below this. So we're not getting anywhere on the long side here. There was absorption here, which is why we see the buyers. This is now micro support, right? And it's really pretty much right here. So if we can stay above this, then we can come, and the idea is to get above these guys. You can get above these sellers here, then we can potentially squeeze the swings. You got to look always to the left and go, well, sellers are here, so that's resistance. And of course, sellers are up here. If I can get above this, I can squeeze and get into the stops. If I come under here, it's the opposite. Then I'm going to take the longs out because the buyers are here, sellers are there, sellers are here. So you can and you could see the micro high volume. Let me just throw this in here for you. So when I look at these distributions, this is the chart volume profile. What it's doing is I'm taking these little structures like this, which is this, and inside it is high volume, right? Right here. So chop, 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 chop. That's a consolidation. Break low. And there's chop here. I break high. I come back to it. This is micro support. Think Russian dolls, the little one. This is too high over here. There's the high volume. It's a consolidation. It's separated by this. If I can come out here, then I can come up to the next, and it's like stair stepping. So we'll see what we do. So I can look at this, and all I'm looking at is price action and volume, or delta. I'm looking at icebergs. I'm looking at the stops, and I'm looking at where the other side is. Think like a retail trader. Don't act like one. Sellers are here, and then sellers are up here. So if I can get over this, then I'm going here. And then the mid, of course. And what's at the mid? Stops. So what I like to do is scale in front of the stops, because I know retail traders are going to mechanically sell the mid or the VWAP. So if I want to get scaled, assuming I can clear this, which of course is important, then this. So I'd scale ahead of this. Or, here's the or, and there's different ways to do this in TraderLab. If you got long, all you want to accomplish is you want to cover the stop, the distance from entry to where this fails, so that the worst that happens is you get risk neutral. And that's part of TraderLab, is to help you understand the business. And part of the business is learning to manage your emotions, which will disrupt your intentionality. So one of the ways you do that is with the trade management, getting risk neutral. That is the key to that. Hope that makes sense. So in theory, this is a long, and it's very sloppy trade today. Can still fall out the bottom, or we're going to squeeze the shorts. And you're going, which one? I'm going to say, you let me know, because nobody knows. We are having a hard time getting north, but it doesn't mean we won't. It just means we might not. Maybe being the operative term in here. Any final questions, guys? In the meantime, while we're waiting on this thing to ferment, let me show you what these structured trades look like, and post any questions you have so I can come up and answer them for you best I can. And remember the link in the bottom of YouTube. If you're interested in visiting the Bookmap Discord TraderLab community, you can download these 60 PDFs, access the library of webinars, and of course the TraderLab community, which is for serious traders. looking to build out the business of trading. So these explain, some of these concepts. I'm not a vendor. There's no course. It's a community. And different traders kind of take these ideas and they mash them into their own cocktail. And then it's a matter of vetting and understanding how this works. Some of these are real trades, you might say. Some are done screenshots. And, like I say, it was just traders were asking me, what are you doing? And I was like, well, here's some ideas. And that's all it is. So this is having some trouble here. We're just not getting anywhere with this. So it might be that we're going to fall out the bottom here. And I don't I don't make recommendations because I take stops. Everybody does. It's cost of production and overhead. Right here is where the buyers are activated. So we want to stay above this, which is why the stop is sitting down there. And either we will or we won't. So that's the idea behind this. And then out the top or not. Final questions, guys. Remember, if you're interested in Trader Lab, there's no cost. The link in the bottom of YouTube you can access, download the 60 PDFs, access the library. The library has real-time narration, some of them up to almost 5 hours long. And what the key, I think, in trading is to try to stay in alignment with it as best you can. And if the alignment changes, then you got to change with it. It's not more complicated than that. It's not about stubbornness. It's not even about an opinion. It's about where does it change? For me, at the moment, this long would fail under here. And then I don't have to do anything. I can just sit back and wait for the next bus to come by. So I'm just sitting here. And needless to say, if I'm sitting in a long here, I'm as anxious as everybody else is. Why would I say that? Even though I've got almost 45 years of doing this, because that emotional state is not under my control. What's under my control is what I do, not how I feel. And that's important for you as a trader to learn. You cannot control your emotions. You can control what you do. Now, how do you do that? If it's not intention, what is it? It is statistics. Emotions are intangible, right? I mean, you can feel them, but you can't touch them. You can't see them, but you react to them. Metrics are tangible. So if you have a structured trade that's vetted, you actually can open your trade plan, which is what we do in Trader Lab. You open to the section for the specific structured trade, which is this, called the IBF. And in it, you'll see statistics. What are the probability of getting, if you take a long out here, or even out here, of getting there before taking out the low of the day? What do you think? If you had that number, would that give you the ability to discipline and manage your emotional states versus jumping out of the trade when it comes back here? If you knew that, would you be looking against this structure to get long here? Or, again, you're out here. Remember I said it could come down here and pick, right? For a long, back to here. That's Trader Lab trading. If you had statistics, which doesn't mean the next trade will be successful or not, how would that impact your ability to maybe create a business and generate sustainability for yourself? Here's the question. Where's the answer? In my opinion, it's in Trader Lab. Use the link in the bottom of YouTube, and I look forward to seeing you guys tomorrow. Have a great day, and thanks for visiting the Trader Lab.